Okay, perfect. Okay, good. So let me give you couple understanding of where we stand right now. Again, I will share the screen to go more in detail about current situation. People don't look at this because this is actually what happened. If we just check on from the beginning of the year, this was the beginning of the year where Bitcoin price was 106,000. Yeah. So and then if you just check 1 month later, where Bitcoin price was already at 96,000, you see that the greed and fear and greed index is a very good indicator for traders to see where we currently stand on the market. This is just one thing. I will show another thing, which is also very important to understand. But here in the greed and fear index, it's so important that to understand actually how it is workable, how it's understandable regarding like setting the trades, doing the payouts, searching for the right point to buy, because this is where people are mostly struggling. That's one point. And the second point where we also see mistakes is when they start to be greedy. Yeah. To be greedy when setting trades, for example, going with one lot already because you have just a very small account. This is how whales come and they want to trigger the stop losses. This is the issue of the stop loss. So if you have a stop loss management which is not good, the whales actually they want to trigger the liquidation zones until you get liquidated because your stop loss was triggered. So this is why it's very important always to understand where we are. When we are at the high point of the market, we typically don't trade bullish, we trade bearish. Yeah. But right now, like for beginners, I always advise only to start with bullish trades, so only long trades, not sell trades. Sell trades are also possible to do. I show a way how we can do that, how we can analyze the market like that. But right now, I only advise to do long trades just for the experience of finding the right point to buy, taking the long position so we know until we can analyze to go on short too. But now on this one, as you can see here, beginning of the year, it was, 106,000. It went down. You see how the crypto fear and greed index was until 10. Yeah. As soon as we come here, yeah, the 10 zone, the green zone, this is a basically free money. So you see that here from 27th February until 9th of April, which is more than 2 to 3 months, right? I mean, that's quite a range. So between that range from February until April, I think because it was end of February and then March and then April, so 1.5 months was basically still a dead crypto market. Yeah, and people could buy crypto at the lowest point possible. At the lowest point possible. So the lowest point was here 9th April. No, I think it was a little bit lower actually. 9th April with 76,000. So I also saw it at 73,000, but it's okay. I mean 76,000, and you see the crypto fear index was 18. Yeah, and if people buy at this green zone, yeah, you see it visible where we are right now with the crypto fear index, and this is also an indicator for the price action. As you can see here, we went up again until 94,000. So the crypto fear index gives a lot of understanding where we stand right now. Here you see crypto fear index is 10, price was 84. You see here it dropped from 93,000 again at 86,000. The crypto fear index was again at 15. So if you just analyze this, this is an interesting zone. The question, and we had this very short here too. So you see when this was June, from beginning June until I can show you exactly where. Let me show you this. Beginning of June, we had Bitcoin price of 104,000. And then Bitcoin price dropped again at 100,000. That was 100,000. And here from 104,000, the lowest point was 100,000. Yeah. So we went from 109,000 10th of June until 24th of June, so 14 days later, we were basically at 100,000. So you see here, the green zone started here again. If people here took the trade at that price point, they could take the trade until we had here the crypto fear index at the highest point again at 74, which was 123,000. And that is basically a 23% return with that just the crypto fear index. Then also, what is very important, especially when people are doing trades specifically, then it's also very important to go with the liquidation map. So I will also show you liquidation map if I can see this here. Here, I will open now the liquidation map. We need to understand how many longs are in the market, how many shorters are in the market. Yeah. So you see right now the liquidation map. If we just check this on 30-day scale, you see green are shorters. Yeah. People always think green is longs, but green is shorters, and red are longs. So you see on the 30-day scale, we had more shorters in the market than longs. People see this as a bearish market. You saw it before on the map when I showed how the price dropped over time. Yeah. But what people don't see is when you check the daily, this was at nearly 40 million until yesterday. So what is always happening is people are like pushing the price down, the big whales, the market makers, they're trying to achieve the cheapest price possible, right? And the only way how they can achieve the cheapest price possible is by letting the market dump because they think it works. And once they hit a price level, they liquidate them directly. They vanish them out. And this is the price point, the reversal, the trend reversal, which we want to find out where that exactly could be. So now in the liquidation map, you also see that now we have 40 million of shorters. We have here around 258 million of shorters at the price point of 107,000. Bitcoin right now is at 108,000. So right now, if we just push the price more further down, there will be more longs liquidated, and then until a point where we hit the highest liquidation points possible, this is mostly where the weights are coming. So we are right now in a very strong support zone. This is also the same point when we check this here until the price will meet 109,000. This is also a point where traders, where shorters, will get liquidated by these whales, because whales, they are mostly doing the long position. So it's always important to be aware the liquidation map, also to really have a deep understanding what kind of risk is going through. So here in the Bitcoin exchange liquidation map, we see exactly from which exchange, Binance, OKX, Bybit, the money inflow is coming. So you see the highest inflow right now is on Bybit. Yeah. So there are Bybit short traders and long traders against the price level. That's why right now we are going to make a little have an even situation where we try to push the price more down and at the same time push the price a little bit more up. So I will see, like, what I feel is, because we have the 30th of August, and in September there's another, just in a couple of days, there will be another decision if the interest rates will be cut at the Fed, and this will push the long traders more up in the market because they can buy Bitcoin by just refinancing their properties, their assets they have, and the companies, of course, they want to hire more people, so they will get new like income streams for them, and use this to hedge against the interest rate. So this will give a very much likely good position for risk on assets. Yeah. Okay. Now the next point, what I want to show you is on TradingView exactly how to understand a market structure. So if we just go on Bitcoin, we want to analyze the market structure. I have to put this everything off so I have a clear, beautiful map. So right now, we want to understand, is this market bullish or bearish? I mean, we can see it basically here. It looks very much bearish, right? But what does the market look like here? People don't know it, right? And this is what I want to clarify. So right now here, before I start, it's very important, if you want to search or like understand the market structure, it's super important that you always look this on a higher time frame. So higher time frame means we are now on the 4 hours chart. We have a 3 hours chart. We have a 1 hours chart. And now I can also show you a weekly chart, and things look different here, right? Here the market looks more up. If you look at the hour chart, the market will look more down. Yeah. And this is the point where we use market structure to really analyze where the current market is. So, for example, let me show you here on the 4 hours chart how the market structure will look like. So, what basically I will do, I will try to indicate a point, for example, here. I'll try to indicate a point like here. And then people sometimes will feel like, okay, I do something like this and push this down. And maybe I can do something like this here. And now I see this as a bearish market. So now I can tell you this is not the way to analyze it. The way how we should analyze this one is by taking the path icon. Let me get this one. Where is it? The path. It's a very good tool when you want to analyze structures, when you want to understand market structures in detail. So it becomes easy for you to follow and set up the next trade. So here, for example, I put one path, another path, another path. So we'll just try to see where the high points are and the low points are. And then this is how I analyze the correct market structure. So, okay, let me go through this quick. So this will take just a quick minute. So we have it as clear as possible. Yes. Try to get every low, every high, because that's super important that you see how the price action was. So as soon as you will go through this, would just take a little bit time for you to be very exact and in detail, because as much as detail you can do, as much as more likely you can understand how the current market structure on this time frame will look like. It takes a little bit effort if you want to do this for every kind of hour frame or like daily frame or weekly frame, but as long as the higher time frame will look similar, this is the point where the market analysis will be much more easier. So right now you see that we have made a market structure. Yeah, this is the market structure currently. Now we want to analyze this quickly. Yeah, so if we take this market structure a little bit more up like this, we make this a little bit bigger. Okay, take this on the weekly. Now I have made my 4 hour chart. Oh, I need to go back. 4 hour. So now what we want to do now, a deep understanding what this current, so it's like an image and we don't understand what this is. We want to see exactly how this market structure will look like and what is this telling us. Yeah, so we will, for that we need a horizontal trade line, horizontal ray one. We make a second one. And then this is the point where we are starting with. This is the starting point here. This looks like a starting point. Always think like on the point up front when you go back. This is where it's actually a start. For example, here could also be a start. But as this is the beginning line, you will see here, here is going to start. So now this market here looks bullish. So as soon as we go up, it's bullish. You see price is going up again, it's bullish. Of course, this is also bullish. Now here, market gold price up again, bullish. But now the price went down, bearish. Price went down again, bearish. Price went up again, bullish. Price went down again, bearish. Price went up again, bullish. Price went up again, bullish. And then price went down again, bearish. So this right now, even if we look at the 1 week time frame, which looks very much bullish, is actually a bearish market. And this is why market structures are super important to understand and to visualize if you are right now in a bull market or in a bear market. And what's actually the goal is as soon as the higher time frame match with the lower time frame, your trade becomes more accurate to place it on the market. This is how we analyze this. The liquidations is what we use to see where we currently stand in terms of big traders, big liquidations, or if we can manage our stop loss. I trade without stop loss, but I do this because I have a proper money risk management, right? So if I just show you a little bit of my trades to a little bit more exact, um, to open them quickly here. So if I make trades, for example, here, um, let me open this one. So you see, I have an open trade. I have open trade, but the question is just how I did this. Yeah. So if I check on Ethereum, it's actually in profit. This was the yesterday's signal. Yeah. So you see, my trade was placed here, and then it went more up a little bit, and now it's correcting. And actually, we hit this at the lower point, and we did the same analysis as I just shown you. Yeah. So now, it's also very important. These are my last trades here, all made by me myself, and we want to analyze how we could make this. Yeah. So if we just go on Bitcoin, you see the last trade was like this. So we did a dollar cost average strategy, dollar cost average on every point until price was doing the action again. This is how we analyze the liquidations point, and then from there on, we took the price up and hit the target zone. Yeah, this is another 19th minute, a quick coffee session. I hope you liked it, and I will say thank you and see you on the next one.